Good morning, everybody. Happy Monday. This is the morning show here on Stock Market TV. I'm Spencer Israel. I have Steve Strazza here with me. I have JC Parets here, I believe, calling in from the road. I think he's calling in as we speak. A lot going on today. A lot of headlines. Some unusual headlines this morning. Yeah? With the whole Jerome Powell thing. That's weird. We'll talk about that. Man, what a weekend. What a weekend. Did you guys miss the chart summit? If you did, that's totally okay because you can still get the recordings and the charts. Here's what I'm going to do just for you right now. I'm going to drop the link to Chart Summit in the chat. And if you register, you will get access to all the recordings, I think, 17, 18 sessions we had over the course of Friday and Saturday, and over 800 charts. Yes. Oh, I actually counted over 800 charts. Okay. The link is in the chat. We were live Friday from like 5 to 7, and then all day Saturday at like 8 to 5, full day. I was right here. Where were you? I was here. It was awesome. We had, JC and Steve were there, David Lundgren, Katie Stockton, Frank Capillari, John Netto stopped by. A lot of what he said went over my head, but that's okay. It was a great day. We had over 1,500 people register. Awesome event. Kudos to everyone who was there. Thank you to our speakers. Get all the recordings on the charts. The link is in the chat and in the description. Okay, enough about that. Let's go. Morning show. I got the guys here. We got David Trainer on today. Sam Gatlin will stop by. Kenny Glick is here. You're here. I'm here. We're all here. Let's go. Okay, you ready? What's up, Strazza?
Good morning.
I think JC's calling in, like from the road right now. JC,
what's going on, guys? Good morning.
Wow.
Good morning.
Where are you?
Where are you going?
I am. I got business meetings. They're business papers. Very important. There will be many leather-bound books and rich mahogany.
Yes, papers. Right. Yes.
Someone's got to work around here. We can't just be dilly-dally.
Here. Let us all shuffle all of our papers right now so we can look busy and do business things together. Okay.
Dude, 800 charts at Chart Summit. Listen, it's not called the Balance Sheet Summit. Thank God. Happy. Right? Can you imagine an income statement summit? That would suck.
That would be boring.
We might have some income statements in the future. I have a feeling. We're going to talk about more income statements and balance sheets at some presentations in the future. I'm ready for it.
It's funny because Strazza over the years has been impressed with my fundamental knowledge. Danny Jassy, the CFO of Stock Market Media, also very impressed. People think I'm just like a chart monkey. They don't know. I've built, bought, sold companies in the past. I get down and dirty. I get down, right? Tell him, Strazza. Tell him.
I'm going to tell him. You're so full of it.
Laughs at me. He's impressed sometimes. He gets impressed.
You're funny.
Listen, we'll get into...
JC knows things.
Yeah. Listen, will... we'll get into the state of the markets in a minute. But while I'm here, I wanted to just share that I did a little shopping last night, Steve Strazza.
What'd you buy?
Little eBay session yesterday evening.
New covers?
Couple new covers. I was inspired by Bloomberg Business Week. Throw it up, Spencer. Show the folks what the journalists are doing these days to scare your parents, financial advisors.
This is still in circulation?
Dude, this came out last week, bro. What do you mean? Wow. Is this circulation?
I like Business Week. I don't read it anymore.
They brought it back. It went away for a while and they brought it back, I think.
No, it didn't go away. It was acquired by Bloomberg back in 2009.
I think, ironically, don't quote me, I think Business Week is actually monthly now. I think.
Yeah, I think
Could be wrong.
you're right. But nevertheless, very creative cover here. Bubble is what I'm being told, and they even put a little pin there on the lower left. Very creative, I thought.
Oh, that's
Yeah,
great.
it's a good
That's
cover.
good stuff. We need those. We need more of those covers.
I wish it was a bubble, man. Bubbles are awesome. They really are so great. You know, obviously these are journalists. They don't trade or invest or any of those things. They just tell stories. But I wish they were right. I really do.
Yeah.
Whoa.
By most fundamental metrics, this is not a bubble. Most people know that. And I think that's the more popular narrative, unfortunately, for now. But eventually, this does get to a point where you will hear the bubble talk. I think a lot more. We're just not quite there yet. I think we're years away, really. And the way XLK is coiled up, looking how it does here on this beautiful Monday morning, I think tech has more upside, not just in the near term, but definitely over the long run as well.
And think about this, man. You know, we are just starting 2026. So we are literally at the halfway point of this decade. And this decade already, we have had 3 major bear markets, crashes, corrections, call them whatever you want. We've had 3 of them this decade, and we're only halfway ththrough the decade. Now they want another one. Like, how many do you need? How many do you need, Strazza? I wanna call out that last magazine cover that we that we were talking about here on the show. Can you throw up the one with the skier upside down in the snow with the map of the world on his ass, and with the skis with the arrows pointing down? Look at that. That was a creative one, I thought. How the markets are going to topple the economy.
Wait, wasn't this cover from like a month ago?
The cover was from November the 13th.
All right,
Is when it dropped.
It's not that long ago in the grand scheme of things.
Well, why don't you, right? That's a great point, Spencer. It feels like just yesterday. Why don't you show just how well stocks have done since then?
That's not the point I was making, but okay. Yes.
I mean, small caps are up double digits. Trannies are up 12%. Micro caps up 12%. Equally weighted S&Ps 5.5%. Emerging markets ripping. The exact opposite of what the journalists were telling your parents' financial advisors.
It's been 6 weeks, 7 weeks, 8 weeks.
Some of the best 7-8 weeks in the history of the stock market is really what it is, if you really want to go there. So this is just to show you guys, we're not just picking on, English majors here. We're using this as information, right? We're gathering data so that we can exploit their weaknesses for our own selfish gains. That's what this is about. So when I'm sitting there last night, giggling to myself as I'm buying magazine covers, I'm like, let's remind the audience why we do this. Can you show the Ralph Lauren 2002 magazine? Mackie loved this one. I sent it to Mackie this morning. He's like, dude, you're the man. Throw it up. This is so good. So good. Look at this. This is 2002. How Wall Street is getting Ralph Lauren wrong, right? So the journalists know better than Wall Street now. You got that? Isn't that great? And so immediately after this hit the newsstands, Ralph Lauren stock got cut in half.
Wait, I don't think that's what the headline is saying. I think the headline is saying that Ralph Lauren is actually a good company and Wall Street doesn't get it. That's right. That's the subtext I'm getting.
That's right. And okay. Then Ralph Lauren proceeded to get cut in half. So Wall Street was absolutely right, and the journalists, as usual, were completely wrong. How about the 1998 cover? Throw this one up. I got the Ralph Lauren one. Cost me $19. Such a buy. This one for like $8. Throw up the 98 one.
I'm not even good.
Here you go, Strazza.
Wow, you could have printed this a year ago, 2 years ago.
Yeah, that's pretty good.
This is as relevant as ever.
The degen economy.
Yeah, so this was right before the 1998 crash, obviously, right? So when the kids are taking over Wall Street, yeah, probably not, right?
Yeah, it's not hatred or code for anything. He's just having fun. This is JC's new hobby, is finding old magazine covers and then pulling up old charts to see if they match up.
And for the record, this is an extremely cool hobby, a hobby that I might appropriate from JC one of these days.
For the record, it's not a new hobby. I've been doing this for 20 years, dude. I bought a couple. I got a couple last night, so I just wanted to share some of my purchases.
And Ricardo, with a good observation, an underrated feature of these covers is not the cover itself. It's not like the main thing on the cover. It's the other headlines on the top. Read those to really get a sense for what was going on at the time, right? The Ralph Lauren one had a thing about Tyco, which I forgot even existed. And now we're looking at we're talking about what?
That was a great American fraud.
Data mining, or we're talking about what is that? Is that Indonesia? Yeah, Indonesia on the top left there. Good stuff.
I got one more. I got another good one. This one was from Business Week also. This was from June, right after COVID, when everybody thought the market was going to roll over. And me and Strazza are pounding the table that things are just getting started. Remember all those breath thrusts in the summer of 2020, Strazza?
Yeah, I do.
It was fantastic. Look at this cover. Zoom in there, Spencer.
That was my presentation at that chart summit.
I remember reading this issue actually. It's the crux of it was trying to make sense of exactly what the cover is saying. The article wasn't saying this makes no. The cover wasn't saying that this is dumb and the market has to go down. They were just trying to understand why it's going up in the face of all this chaos.
Right, but everybody was saying that the market had to go down at the time, and this cover was questioning its validity, and obviously the market continued to rip higher. So anyway, I wanted to share these charts. It's fun. I picked these up last night. These were just some new additions to the collection, inspired by Business Week's bubble cover yesterday, which obviously I also bought for the collection. But I just wanted to share that with you guys this morning. I hope you enjoyed those.
Those are great.
Yeah. Really good stuff. As usual, you have immaculate taste in magazine covers. Yeah. So I have no notes.
At this, my friend.
I appreciate you guys. Can I talk about one chart before I hop? Can you throw up the QQQJ?
Oh.
And then we're going to talk about the Powell news. So everybody stick around, and the big Mo.
Wait, Rick, that was in the other. Rick, that was in the other one.
Big headlines here coming into this week.
So, Powell. When are they going to bring in the guy that's going to lower interest rates? That happens in May.
Yeah, that happens on my birthday, May 15th.
Yeah. Yep. Go ahead. Do this, and then we'll get to Powell.
Powell doesn't like getting bullied around, huh? I don't like it when they bully me around. So everybody's butthurt that these Qs aren't making new highs. Haven't seen a new high in the Qs since October. So the Qs, QQQ, are the top 100 companies in the NASDAQ, right? This is 101 to 200. Funny how the top 100 can't make any new highs, but 101 to 200 keeps making new highs. So just a fascinating look at stocks, guys. So keep this. A lot of people don't even know this index even exists. Like, they don't even do the work. They're just like, oh, bubble. I don't understand why stocks are going up, so it has to be a bubble. It's not because I'm an idiot. It's because it's a bubble, right?
No, this is great. This is a great chart. Important development. Reminds me of the small cap Russell 2000 breakout in a bunch of ways, just a little bit ahead of it. But we're seeing bases that we've been watching all cycle and saying, well, when is this going to finally break out? That list keeps growing, right, JC? Isn't that the bigger point? We've been waiting for certain areas of the market, whether it's transports or small caps, or even some different small cap indexes or the next gen NASDAQ to finally break out, right? And stick the landing above those prior cycle highs. The list of those indexes that are now getting this done has been growing in a big way. I don't know, the past couple of weeks.
Dude.
Also, we are now on month number 3 of the Mag 7 doing basically nothing as a group, right? So I think people are starting to catch on to that idea. People are catching on. Oh,
DeSantis was tweeting about how it was only a few stocks. These guys on that All In podcast thing were talking about how it was only a few stocks. They were lying to you.
No, JC, people are
They
catching
were
on.
lying,
People
right?
are
But this
catching
was
on
back.
now.
This was then. This was then when you at the time that you're talking about when the Qs they were telling everybody there was only a few stocks. They were lying to you, and we were here on the show telling you the exact opposite. So, all right, guys, I'm gonna hop. Try not to get us canceled. Adios.
And on that note,
They're saying more people showing EM spy ratio. That's interesting. Very funny from Higgins. This is like collecting broken clocks and pulling them out when they get the time right. That is funny. That was a good one. Really good,
it's a really good analogy.
That was
Actually,
really good.
look,
No,
look,
look, it's a fun exercise. We don't weigh it too much, obviously, but it's comical almost to look back at the timing of some of these headlines and see how, the way that the mainstream media is portraying things or the views that they have and the timing of their views tend to be major fades. So I think that's
in my opinion, it's mostly just fun to see how good or poorly things age. Right? Some things age really well, right, and some things age really poorly. And of course, you don't know, right? Steve, they say in journalism school, they say that journalism is the rough draft of history, right?
Yeah.
So it is the rough draft. You don't know things are going to happen in the future, obviously. But it's just a fun exercise to just look back and say, hey, that one they got it right. Oh, that one they totally screwed that up. That was not at all what happened, right? So just fun. That's all. We're having fun here.
Yeah.
Do you want to talk Jerome Powell and Federal Reserve independence?
Well,
speaking of things, this headline belongs on that Bloomberg cover from June of 2020, which is all the headlines out there, all the crazy stuff. There's social unrest and the markets are crashing. This would have fit right in with that, right? Because this is a headline that I guess if you're looking this morning does have some people spooked because gold is trading up and the market has reacted to this morning, right? But in the grand scheme of things, like how big of a deal is this really to the market, right? It's a big headline, but is it really going to matter for us 3, 6, 9, 12 months down the road is my question.
I think it can if we don't cool the jets on this shit, right? We all know how Donald Trump operates as president of the United States, right? Very aggressive. Most of the time, he's good at getting what he wants too, and using the court systems and different executive functions to get that done. You can't fuck with the independence of the Federal Reserve. This is a big one that I think will bring undue pressure through uncertainty to the markets. The Fed has to remain independent. And Powell just made the point last night on his little press conference that this is unprecedented, really. And it's all about political pressure to lower interest rates. I think that they served them with grand jury subpoenas from the DOJ, not just for the Federal Reserve, but that also threaten, I think, criminal indictment for Powell specifically or individually. That's kind of crazy. Like, let this man do his job and then replace him in May, if it's been that bad for you. But the truth of the matter is, Jerome Powell has been an incredible Fed chair. Spencer just pointed out how many, different crashes and rallies that we've had just in the past 5 year time span. Powell navigated through the pandemic, a nasty bear market in 2022. They raised interest rates faster than ever a couple of years ago. He did all of this and really, kept markets steady the whole time for us. So as somebody who's owned risk assets and been long risk assets over Powell's tenure, like, I love the guy. I think he's done a tremendous job. He's been good for investors. He's been good for traders. And to see this kind of pressure from the president on a guy who, like I said, has really done an impeccable job here just sucks. And the market's not going to like it. As this escalates, and this is a huge moment of escalation in this little feud, if this keeps getting worse, you're going to see it in the market. The market will not like this. It's not cool. And I think, Trump has a lot of smart people giving him advice in his ear. Where's the guy in Trump's ear or in the Oval Office right now saying, dude, don't do this. This is going to fuck up the market. I really hope some people are saying that to him because this isn't cool and it will create volatility.
Did you see what Trump said? So I think it was NBC News. They asked him last night about this, and you know what he said? He said, "I don't know anything about that."
Yeah.
Look, Jerome Powell got dealt a really shitty hand, right? He's been chairman of the Fed since February 2018. Think about like the term that he's. I mean, this is his second term, but still, think about like the tenure he's had as chair of the Fed compared to like Janet Yellen. I mean, she had stuff too, but there was no pandemic during Janet Yellen's
She
term,
sucked,
right? So I think people that criticize the Fed and thereby Jerome Powell, there are some fair critiques to be had. They were admittedly pretty slow to raise rates, right? Coming off the pandemic, I think we all pretty much agree they were wrong on inflation being transitory. Those are things that they were wrong about. But by and large, I agree with you. They have done a very good job in what was a very shitty hand to be dealt, right? They got dealt a really crappy hand. The world shut down for 6 months. Or was it long? I don't even remember. Was it longer? Who even knows anymore? But right. Depends on where you lived. And yet here we are. And that was how many percentage points ago, right? In the market? It was a lot. So I think you're right. By and large, he's done a good job. They've done mostly a good job. Not perfect, but mostly good. This is a really weird headline. Of course, we all know with regards to like this administration, there's the things that they say and there's the things that they actually do. Like this, you could throw this in with the other headline this morning, which is the president tweeted that effective like 8 days from now or something, he's gonna mandate that credit card companies cap interest rates at 10% for a year, which is not. I don't think he can really do that. But he didn't say he was gonna do it. He said he said effective 8 days. He's gonna I forget the exact wording, but like there are legalities at play here is the point I'm making, right? Like there are things that they can say and there are things that they can do. And it takes time for these things to play out. So this is just a headline in what is sure to be 6 months more of this stuff, right? I saw this morning that the odds of Jerome Powell staying on as governor after his term as chair expires have surged, right? People think that he's going to get petty and just stay on, right? Stay at the Fed after which he can do, right? If he so pleases. So this is just. I'm kind of tempted to just go the JC route here and just say this is just noise, right?
I don't know.
It's just noise.
I think if it continues to escalate, it will spook the market, and it's just not. It sets a bad precedent for the future.
It's weird. It's certainly weird.
To do this.
Yeah.
Look, we'll see how it goes. He only has until May anyway. Like, just let the guy finish his term and get out of here. Then bring in the guy that you want to lower rates, and that probably all goes fine. I'm sure he's just trying to scare him, but it's a little bit unfortunate in my opinion. I think this one's a bridge too far. A lot of times Trump takes these aggressive actions and he gets what he wants and it ends up being really good for markets. I don't think this one will be that way. Also, just some stuff in the chat. The Fed chair really makes the decision. You don't want to overestimate how important the board is, right? They strive for consensus, but the chairman of the Federal Reserve is really making the decision, and then the board is getting on board with him and voting with the Fed chair. That's really how it works behind closed doors there. It's not like the board is going to oppose Powell and vote for something different and like he's not going to get his way. The Fed chair gets what he wants. Is how this has always worked, and I think it's the way it still works today. Imagine China pumping because she is more reliable than Trump. That's definitely not the case or what's happening or what's ever going to happen. China is pumping because there is a concerted effort in China to pump the stock market. And China's got a lot of money that they could throw around, a lot of different things that they could do with policy to drive the change or the impacts that they want. So they want their stock market to go up right now. They're making it easier for people in mainland China to buy stocks and create a bid in the asset prices for these Chinese equities. And when China wants to do something and makes a big effort to do it, they got a lot of money to throw around, a lot of power. They get it done. So that's what's going on. If you are shorting Chinese stocks or fighting the trend, the brand new bull market in China right now, just know you are literally fighting Chinese government, one of the largest players on the global scale. So not a game I would want to play. They're going to keep pumping these stocks, and it's just starting now. You got years of runway. I think China continues to be a great place just for generating alpha in a portfolio for the long term. And I think it's just getting started. Spencer's like been half in, half out. He dips his toes and he gets excited.
I'm just laughing.
They drew down.
I'm laughing because this is not intentional, I swear, but it does seem like at least half the days we do talk about China right before Kenny comes on. Kenny, I do apologize. That is not by design. We're not trying to piss you off. Right?
Hold on.
But it does seem like we do talk about China right before Kenny. And Kenny's like, I hate China. Right?
Kenny is going to buy Chinese stocks. He's going to be running hot Chinese growth stocks before this thing's over. All right. Kenny, you better let us know once you start buying the Baba, my friend.
I don't know if that's true.
But anyway,
all right,
really good start to the week for China. If you look in the pre-market, it's Chinese speculative tech. We've been getting involved. We just dropped a deep dive report on our favorite names in Chinese speculative tech space. There's a lot of stuff going on. KC's up 15% this morning. You got the VNet and the GDX.
I saw that.
Keep pumping. It's looking really good out there. Baba up 4.5% pre-market. Baidu looks like it's ready for another leg higher after a week of high and tight, following its big breakaway gap, up 3% pre-market. Even JD looks like it's about to rage out of this little coil coming off the lows. I think all of these are buyable long-term, the names I just mentioned, and I think all of these are super tradable and pretty much set up with actionable entry levels right here. Like, I think you want to be trading the hell out of these Chinese stocks for a big leg higher, and you also want them in the long-term portfolio because when these stocks go, they go for a long time, and they outperform everything else. So if you're not in China, love you, Kenny. It's crazy.
Wait. Where was that report? Is that report published yet, or did it not go out?
It's going to be published as soon as we get off the show. It'll be up.
Okay, great. Looking forward to it. All right, awesome. Kenny, let's not talk China, okay? We'll talk about anything else, I promise. I do.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Hey.
Oh.
What's up?
What's going on?
Hey. Whoa. Look at me.
Look at that. I want to give Kenny a shout out. Kenny made two appearances at Chart Summit. But I liked the Friday night one a little more, I gotta say. It was not educational. They weren't looking at charts. He wasn't looking at patterns or talking about VWAP at all. I mean, he was, but it was more of like how VWAP, literally, you said it changed your life, and you told your life story, or your career story, I should say. And you said some really cool things. You talked about your time in like those boiler room shops, and how that just was ridiculous, and the commission structure, and honestly, if you did not listen to Kenny on Friday night, you really should go back because I really enjoyed it. It kind of was just like a fireside chat with Kenny, and no charts, no nothing, and it was I loved it. So kudos, Kenny, because
thanks, man. And I love that you said fireside chats, because I'm a big fan of that. So when I become president, I'm going to send everybody a little transistor radio, and every Friday at 4:20, we're going to smoke a J with the president. So we'll have some chats, and I'll bring the nation back together. It'll be a lot of fun.
Yeah,
but it's important to know that, because this is the easiest, hardest thing anybody will ever do with their money. You're out there, and it's all those emotions that get involved, and your fear, your greed, all that stuff, and all the mistakes usually come out of that. So that's why I try to stay on the path of righteousness, which is VWAP, and it just keeps me focused. What's up, my man?
Kenny, what was it like being the man with the morals in the boiler room? They must have hated you.
Oh, I was just talking about this when Jerry died. Bob Weir died. Obviously, everybody. It's a little sad. When Jerry died, it was like they were waiting for me to come in that day to rip me apart. Oh, your hero's dead. Get on the phone. Oh, you must be you want to cry now, don't you? Don't you want to cry? Get on the phone. I mean, they were tearing me apart. My girlfriend had just broke up with me. Then Jerry died. I was getting my ass kicked, and it was just awful. And they're like, these people aren't your friends. You don't care about them. It was just a terrible place. And I remember my father and I had accounts at the place, and I remember every time they'd pitch us a stock, they'd have the dog and pony show, and they come in, and then I would get called into the office, and the first thing would say is, "Don't buy the stock for your father. You just told me it's going from 2 to 50 in the next 2 weeks. Don't buy the stock for your father." Okay.
What a tremendous experience that had to be so early on.
You know,
Really, I want to hear more of those stories from you. I thought that was awesome.
Oh, I got stories for days, my friend.
I know you do.
Again, you need some stories to get you through, because sometimes, again, trading hasn't been boring in a very long time, but there are days where there's really not much to do. So we got stories for days, and we'll that's what the schmooze is all about. We were bringing back the schmooze in a couple of weeks. We got to get you on. We're going to get Voz on, actually. So this Thursday, we're all going to meet in the city, I guess, right? So kind of like a live schmooze. But we're doing the schmooze now when earnings season starts. It really just started when we just prepare for weekly options, and just to get ready for the next day's event, the schmooze was born. So Thursday nights, if you don't know what I'm talking about, we get together on the site and, just shoot the shit, have a couple of cocktails, and prepare for option expiration Fridays.
I think it's great that you do that. You have built such an amazing community over the years, and it's good to meet your people IRL every now and then. Really is. It's good stuff.
Yeah, we're going to be going to Vegas, so that should be fun. So
hell yeah. Hey, look, speaking of Vegas, I just got to say, I'll do this with Kenny on the show because I know he's interested. What a grand portrayal by the NFL this weekend. I mean, if you're wondering why the NFL has become just the dominant sport that it is, by far the most popular sport in America, look no further. Just go watch the fucking games. I mean, mind-blowing how good the first 4 games were.
Absolutely. Yeah. And it's also nice because I'm a Jets fan, and I'm a New York sports fan. I don't root against the Giants. It's just, wow, this sport actually isn't so bad when you see real people playing it.
Just the action this weekend. I was hooked. I did not plan to spend every waking minute of my weekend watching football, but it just happened that way because I was glued to the screens. The games were so good. So I thought that was...
You gamble on the sports too, my friend?
Oh, I dabble. I'm a big live line guy. Yeah.
Live line is the greatest.
Big live line guy.
I did not do well because I kept betting. I bet what I don't want to have happen. So I had Philly big to win that game at the end there, and I'm surprised they didn't win. But most of the teams that had the ball last in the 2 minutes, they actually wound up winning. So I wanted the Bills, so I wound up losing that game. I wanted the Niners, so I wound up losing that game. So, but
no,
I had the Jets. That's why I just bet against the Jets. So I bet against the Jets for 40 years now. I'm always ahead. But I usually just bet what I don't want to have happen because you never get what you want. So
I hate bet. I hate bet against the Eagles every weekend, and it usually fails miserably. Yeah. So this weekend I was coming in, smashing that live line, taking the Niners money line, and it finally worked.
Good. So such good football. Yeah, a lot of fun. And that's why betting against the Ravens is right there too. That was an exquisite. They see, when you're a Jets fan, they're going to lose. It's nothing. It's not even a surprise. It's how much they're going to lose by. The Ravens, you can make some real money because they break your heart in all kinds of new, fascinating ways. And that game against Rodgers, I was like, watch, they're going to miss the extra point. The Ravens are going to get the ball back and still miss this field goal. And I'm betting hundreds and hundreds of dollars, getting plus 500, plus 800. And when they missed that kick, my son's crying. My son became a Ravens fan because he couldn't take the pain of being a Jets fan. So,
all right, Kenny. Aside from football,
yes.
What? All right, you guys could talk markets now. This was
I was going to say, just aside from football, what are we actually watching this morning?
Well, I'm actually looking to hedge some silver. So short SLV. I just dabbled in it right now. I'm actually short SLV because I'm a hard commodity guy. So I'm still buying the 10-ounce bricks. I got bricks all over the place, coins, that kind of stuff. I even nerded out this weekend. I bought some of you guys. If you really want to nerd out with me one day, I'm buying Standard Liberty quarters. So I'm a big coin guy, big want to hold it in my hand. So this AGQ SLV trade's been awesome on the upside, but now I'm looking at it as a hedge. So I just dabbled on an SLV short just now. And of course, the market gapping down on a Monday has always been a buying opportunity. So I'm watching the UVXY. If it stays green, then maybe we don't see the standard buy the dip on Monday. So I'm looking at the Qs, looking at UVXY, looking at SLV, the same three. And then you got INBS, which was just the crazy one from a couple of weeks ago. Just woke up out of the dead. I don't know what's going on with this one, but just absolutely nuts, gapping up a couple of 100%. So looking at that one right now, it just did the faux show, bro. Maybe actually couldn't buy it because it did hold prior day VWAP. And then you got some, I don't want to say I'm a fan of the Chinese stocks, but some of the automakers like XPEV and, a couple of those have been moving right now. And, I'll be looking to play the fade. I don't want to be an owner of Chinese stocks because I boycott since the Puda Coals and all that stuff back 20 years ago. I'm still emotionally scarred from Chinese stocks. But I'll be looking at Tiger, TIGR, XPEV. Tiger's one of my favorites. If there was a Chinese stock that I had a fave, it's kind of like supposedly it's the Robin Hood of China, which means it's two Chinese kids in a closet looking at a picture of Robin Hood. So I don't know. I don't trust any of these companies. So, but for us day traders, we're just looking for the action, and the earnings season is here. So
it's here. This is the week. We got JP Morgan tomorrow.
Yes.
Right, Delta Airlines tomorrow.
Yes, Delta Airlines and then JP Morgan, and then we're off to the races with the banks. So I'm looking forward to this. And again, I love saying this part out loud. I've never been this excited to be a trader ever. I've never thought I would have this excitement on a daily basis to be a trader again. Considering I lived through the heyday and all the crashes and booms and busts and all that, and recessions and pandemics. Here we are. This is just awesome. It really is every day.
You too can trade live with Kenny every single day at hitthebid.com, and you can actually trade along with him and see how he uses VWAP. And so, just to be clear, and I'll let you run the SLV short. That's not a day trade. That's a hedging the rest of your life trade, right? Because you're drowning in silver coins
right now.
It's
day trade, yeah. I think silver's going to 120. 50 got us 80. 80 gets us 120. But I'm just looking at it as a quickie, just to see what we can get out of it. And
all right,
right now I sent the video. Actually, I'm trying to do something else with the members called Glick's Picks, kind of little video vignette of what I'm going to do in the morning. So yeah, SLV, AGQ, and INBS were on the video today. But
all right, Kenny Glick, hitthebid.com. Get back at it.
All right, I'll see you guys later. Good luck.
All right. Gonna hang out with Kenny in the city on Thursday. Gonna be fun. All right, let's bring on today's feature guest. We got David Trainer in the house. He is the founder and CEO of New Constructs. We're gonna talk about what beat the market last year and what could beat the market again this year. I don't know. Let's bring him out. It's a surprise. How about that? Is David here? David is here. Great.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Trainer, good morning.
Good morning.
Oh, your image is flipped. Let's flip you around there. Let's make you look like you're not backwards. There we go. How we doing?
Good morning. I'm doing great. How are you doing, Spencer?
Doing excellent. How has the start? Has the start to your year been as good as it's been for everyone else? Because we've had a pretty good start of the year.
2026 is looking pretty good. 2025 was good to us as well, and it's a fascinating time, I think, with respect to investing, AI, earnings. I mean, I think things are happening really fast, and the world is. We're going to wake up and look back and say the world was so different just 2, 3, 4 months ago.
Yeah, things perpetually move faster than they used to, right? So time seems to move faster because things just happen faster, right? Are you're still doing your earnings thing, right? Where you're actually like looking into the reports and looking at the footnotes and seeing what's mispriced there. So this is kind of your season 2 coming up.
Oh, heck yeah. We just published last week, report on 5 stocks most likely to beat, 5 stocks most likely to miss. It's the same core earnings methodology that drives the index that we have that's performed so well recently. And that's why I say, I think it's a fascinating time because, while people say, look, earnings don't matter, valuation doesn't matter. When you look at the performance of our index, it clearly matters in a big way. And I think that the fact that we've got machines now able to do this earnings analysis that provides an edge, incremental value, well, then, that's clearly something that investors can get behind. Yeah, it's a great picture. Last year, the core earnings leaders index up 27% versus the S&P at 18. That's all in total return. And this index is based entirely on what I would call the core earnings edge, right? How much does our real number differ from the reported number? And when our real number is a lot bigger than the reported number, those stocks tend to do well. Those stocks are companies with earnings that are understated. And, that matters.
David, how long have you been doing this? Because I've only, like myself, my history of paying attention to markets and earnings only really goes back to like 2015. So I'm trying to, I don't know what life was like really before that, right? But I've gotten the sense, just maybe since COVID, it's hard to say exactly, but over the course of the last 10 years for sure, there's definitely been the culture around earnings reports seems to have gotten more obsessive, where people, whether it's a top line or a bottom line beat, and maybe part of it is like the popularity of it on social media, but people are becoming more obsessed, it seems like to me, than they used to be. But maybe that's wrong. Maybe I'm just wrong. Has the culture always been that way? This obsession over, did they beat? Did they miss? Because I feel like it's gotten worse and not more productive in the last few years.
Spencer, it's hard to say. I mean, I've been in the business since '96, right? And 30 years. So I would say that people have always obsessed over earnings. Now, the number of people that obsess is way bigger. Right? When I started, it was really just institutional investors. There was sort of no online trading. There was sort of no retail public crowd. And I think now the obsession is, I think it's exacerbated, like most things, Spencer, because of all the misinformation.
Yeah.
I mean, people just believe almost every rumor. It's like, oh, I saw it online, it must be true.
or just social media, because it's very easy to understand. Oh, a company reported earnings. Did they beat? Did they miss? Oh, did they beat? It must be good. They missed. It must be bad. Right. And of course, we know it is never that straightforward, almost never that straightforward. Right.
Yeah, there are tons of studies that show that the numbers are systematically manipulated, massaged, and the Wall Street people just kind of ignore it. I mean, these are clear, published, peer-reviewed studies, and they've been out for years. And so it pays to do your own homework. And like with everything else, like, do you believe, would you make medical decisions? Would you make life decisions based on social media? You shouldn't make investing decisions based on social media either.
It's funny because I just read a good article over the weekend about Under Armour and sort of the failings over the last decade. And Under Armour very famously had this streak. It was 20% year-over-year revenue growth for like 20 quarters in a row. They had this streak. And the reason they had the streak is because they were just pulling forward orders. They were pulling forward revenue, right? And then one day they just ripped the Band-Aid off and said, all right, we can't pull forward anymore. Screw it. If we're going to miss big. And they missed really big. This is like in 2018, I want to say, 17, 18, somewhere around there. And the stock crashed 25% in one day, right? And it was like one day they just like, all right, we can't manipulating the numbers anymore, right? We got it. We're at the end of the rope here. So these numbers, the headlines are what the headlines are, but there's so much more to it than that, right? And that's why I appreciate your work, because you're looking like under the surface and you're saying, is this a real number or is this a fake number, right?
100%. I mean, and look, I mean, even back 30 years ago, that was a craft, right? And it matters. It's called doing due diligence. And Under Armour is a great story. I mean, anybody who was looking past the headline number would have seen what was going on the balance sheet. I mean, you can't just pull forward revenue and hide that on the balance sheet or the cash flow statement. I mean, it's kind of silly, but I do think that, look, in a world where you have meme stocks, in a world where you have all kinds of sort of crazy things going on social media, unfortunately, a lot of people, I think, get exploited here and are taken advantage of because they don't know that they need to look for a better number. They don't know that they shouldn't trust us.
All right. So what are some things that, since earnings season is upon us now, basically tomorrow, what are some things that we should be like looking out for?
Well, in our report, stocks most likely to miss, we identified 5 stocks that have the most overstated earnings. And so, look, to kind of to your point with Under Armour, right? Companies are messing with the numbers all the time. When they finally decide to sort of, give up the ghost and admit that they've been manipulating, you never really know. But we would count, a miss as either just a miss or a lowering of guidance, because that's a thing too, right, Spencer? You could be like, oh, I missed my number, but I raised my guidance, stock goes up. It's typically a lowering of the guidance is going to come in before a miss, because that way the management team can sort of soften the blow. But Moderna, ticker mRNA, NRG Energy, Datadog, those are 3 top picks we think are most likely to miss in the next quarter, either on their top bottom line or outlook number.
And this is based on what they've said previously, nothing more.
Well, it's based on the consensus estimate and the difference between what we've seen in their real earnings versus their core earnings, or their reported earnings versus their core earnings. So we're going back and we're looking how much distortion is in there. When there's a lot of distortion, well, then then the difference typically, not always, there's going to be a big difference between our estimated core earnings number and the street number. And where those differences between our number and the street are the largest, that's where we identify the most likely to miss and the most likely to beat.
Do you look for themes on like a broader industry or sector level, or are there no such themes?
The themes merge. I mean, you'll see it because we're doing this work across pretty much the entire market. And that's part of the power of the system and the AI, is that we can do this deep, really systematically sophisticated analysis across almost all stocks, right? And so there are certain times when we see more stocks in a particular sector that are overstating versus understating.
Because you mentioned an energy stock, you mentioned a software stock, and you mentioned a biotech stock. So I'm just wondering if there are at certain times of the cycle, if there are certain industries that are more prone to earnings distortion, as you say, right?
There's not a lot of great analysis on this kind of stuff because our technology hasn't been around for that long. I mean, the case study written on what we did, I don't think came out until around 2018. Then there was another vetting by Harvard Business School and MIT Sloan a couple years later, and then our index has been live trading just for 14 months, and so the proof in the pudding hasn't been out there, and the analysis hasn't been out there that long. But yes, we're looking at this across sectors and across industries. And off the top of my head, I don't know. I haven't looked. Yeah. We just did the top 5 and the bottom 5, and I didn't ask about the sector, so I actually haven't.
What I can appreciate is you're making calls beforehand, right? Is I don't know when those 3 stocks report. I imagine they'll all report in the next 3 or 4 weeks. But you're making the call now, which I can appreciate because it's easy to make the call after the fact, and that's what we all give grief to the analysts for upgrades or downgrades after the fact. It's like, thanks, where were you yesterday, right before the earnings report? But I can appreciate that you're making the call and saying this is what they've said previously. This is what was actually in the report. This is where the street thinks they're gonna be, and we think there's a spread there. So I appreciate that you're going out on a limb ahead of time. So kudos to that. I do want to ask you, last go around, can you tell us what are some of the things that you saw last earnings season, either major themes or instances where you're right or wrong?
I think the biggest and most interesting theme, and by the way, thanks for the kudos on being ahead of the game, because what's the point, right? And look, I think people don't realize Wall Street analysts are not really in the business of making their clients' money, their investing clients' money. They have to pay homage to the investment bankers. That's who pays their salaries, and that's who pays their bills. So it's about making companies happy first and foremost, and that's a different activity altogether. In terms of themes, I think the most interesting themes are around energy and around AI. Right? I think we're seeing energy in a macro environment kind of go through a major sort of sea change, where we're seeing more peace than we've seen in a long time. And some of these despots that control large amounts of resources being removed, and that's having big impact on supply. I think that long term is going to have an impact on a lower price of oil, potentially lower inflation, things like that. And that's going to affect certain energy companies more than others. In particular, we tend to like the firms that are in the business of just transmission. They're middlemen. They're taking a toll. And with respect to energy, the one thing we also know is that there's going to be plenty of demand. As I think we see more peace, We see more sophistication and evolution of civilization, which means they consume more energy. And we know that AI is going to consume more energy. So there's going to be plenty of demand. Prices will be stable. And those firms that are in the business of just transmission, as opposed to being very price sensitive in the production and selling of oil, those are the ones we like a lot. There's a lot of master limited partnerships in that space as well, which typically we like to shy away from. But I think oftentimes MLPs, master limited partnerships, represent some really smart people who said, listen, we got a great company. We want to make sure we own the cash flow. And that's maybe a bullish sign. And then with AI, I think what's really interesting on the earnings front, and this is where earnings are really probably most misleading, Spencer, is that the earnings numbers don't really give you any sense of just how big the CapEx is in the present. So when you're looking at earnings for a Microsoft, an Apple, a Google, an Oracle, et cetera, all these hyperscalers, even in NVIDIA, right? What you're missing is really how much they're having to try and invest to keep their future earnings up. And what we're seeing is a very big line in the sand between the haves and the have-nots. The haves have the cash flow to stay in the AI race. And I'm sure you've seen the headlines that the AI spending is like billions and billions of dollars per month, right? And the have-nots don't have that cash flow, and they can't stay in the race. And the reason I'm making a big deal out of that is because I don't think the race is going to be a short race. I think it's going to go on for a while. In fact, I think we're only in the first stage of the AI spending race. The first stage is in all the infrastructure, right? They're spending crazy amounts of money on compute because, by the way, like Moore's law just keeps improving. And so NVIDIA can keep rolling out these better chips. People can spend money on that. What we're missing, Spencer, and across the business in terms of AI is the spending on data. Everyone's just assumed data is a free commodity. You can pour the internet into a large language model and get all your answers. Well, we've now seen that's not the case. You can't trust the output. Hallucinations are dominating. So at some point, we're going to have to figure out what are we going to feed all this compute? We spent trillions of dollars on data centers and compute and stores and all this infrastructure. Where's the subject matter expertise that these machines are going to use? And that's, I think, a whole new level of spending and a whole new skill set that a lot of people don't know how to actually do. They don't know how to get clean data because very few people have ever done it.
So far, we've only spoken about earnings, which I take just to mean earnings per share and revenue. How often are you looking deeper into the financial statements? Because a lot of times what happens is the headlines will zero in on a cherry-picked metric based on whatever the stock has done after the fact. So a company beats on the top and the bottom line, but the stock is down. Oh, it's because their CapEx was way higher than expected. Oh, but their cloud revenue disappointed or whatever, some random thing. And right or wrong, it's just kind of the way it is. How often are you looking at like the industry specific metrics that these companies are in?
Always. When I got into the business and back in 1996, it was always about looking at everything. Because how do you make an informed decision without looking at the whole body of work, all of the financials, the entire filing, the competitive position, how it fits versus peers? It's like going to the doctor and saying, you're telling him you're sick, and he's like, oh yeah, I'm going to make a diagnosis based on looking at your ears, right? No, you want to look at everything. You're in the blood panel, you do it all. And I think investing should be the same way. Anybody trying to tell you different is trying to take advantage of you. So we do that all the time. That's what I've been doing for 30 years. And that's why I built AI to help do the work, because it's just too much.
Yeah.
And it needs to be done consistently. The problem I'm often, my experience in trusting humans to do that work, is they all have kind of a different way of doing it. At New Constructs, there's one version of the truth around how to do everything. We've got a wiki page for how to deliver office supplies, right? We don't mess around. And the machines are great because they do things exactly the way we ask them to do them. And then we can measure that performance over time. We can add to it. We can incrementally improve upon it. That's what we've been doing for 30 years. And that's why, we have another index with Bloomberg called the Very Attractive Stocks Index. That's based on our overall ratings, which are a full deep diagnostic across cash flows, valuation, competitive position, everything. And that outperforms significantly beats the S&P 500 by a lot over the last 5 years also. So it's the system works. Real fundamental analysis works if you do it completely.
in that index you just mentioned. So what makes a stock attractive? Is it you have to compare it to something, right?
Yeah, that's the benefit of looking at as many stocks as we look at. So we identify those stocks whose cash flows are most understated and whose valuations are cheapest. It's a simple risk reward analysis. It's like, okay, well, the market is understating the potential and the profit for these companies by the most. And on the other hand, very unattractive, they're overstating it by the most.
How often or how much do you consider the price, either before a report or after the report, and looking at the reaction? Because that's what we do. We look at the reaction to the report.
Yeah, we're looking at price every single day, Spencer. I mean, we think price in theory, right, represents the expectation for future cash flows to the owner. And where we like to really dig in is how high are those expectations based on the price today compared to what the company's done? And so getting a good understanding just how big a difference there is oftentimes between, hey, expectations for future cash flows. Like, for example, we got companies whose price implies that cash flows are going to be 2,000% higher than where they are today. Well, that's risk, because that's a really high bar for the company to meet. It's unlikely that expectations will go much higher. On the other hand, we like stocks where the expectations are for cash flows to be permanently lower than where they are today. Those are low expectations. So every day we're taking into account price to get a sense of expectations versus historical performance.
Yeah, but do you ever just throw your hands up and say, well, there must be a reason why expectations are high or low? I mean, that's the market for you. So I don't know.
Yeah, no. I mean,
if the market says they're up here, then they're up here.
That's exactly right. No, there for sure times when our rating system, we'll say all the time, it's a beginning point. It's not the end. I think overlaying technical analysis like you guys do is extremely smart, especially for timing. And we have stocks on our focus list that don't get our best rating because we say, look, expectations are high, but we think the company deserves high expectations and it's going to do even better.
Awesome. David Trainer, it is always a pleasure to talk, sir. Thank you for joining us on this Monday morning. Congrats on the year that you had last year, and we'll be in touch. This is awesome. Nice job.
It's good to be with you. I appreciate it.
All right. Whoa, it is 9:20. Time flies when you're having fun. I had no idea that we were about to open here in a minute. So let's bring on Sam Gatlin, and then we'll hop out of here. I'll let you guys get your day going. Were there any other headlines I wanted to hit? I talked about the credit card thing. So just, Visa, American Express, MasterCard, Capital One, Synchrony, all down this morning. Those should be watched closely in the next half hour or so. What else there was some random airline M&A this morning. Allegiant is buying Sun Country for you nerdy airline folks. So SNCY is the ticker for Sun Country there. So that's going to trade up. I think that's a cash and stock deal. Strazza mentioned China, a lot going on there this morning. We talked about the metals a little bit. That was kind of it on the headline front. Oh, why is it? Oh, you know what? There is also a big retail conference this week. I saw it's a retail and consumer conference. We'll have Mackie on Thursday to talk about it. I saw Shake Shack basically pre-reported this morning because of that. And then Abercrombie and Fitch is doing the same thing. And they're down 17% this morning. They pre-reported. They're at the conference, and it looks like what they say. They see net sales growth of 5%. Whatever they said is bad. We'll leave it at that. Stock is down 18%. So not a good day for Abercrombie or Fitch for that matter. Okay, let's bring on Sam Gatlin and see what he's watching. Sam was also featured in Charge Summit. If you missed him Saturday afternoon, you missed one of the better presentations, I thought. So Sam, very nice job. Let's get you out here and then see what Sam was watching. Ooh.
Yo, Spencer, I'm glad you enjoyed my presentation.
I you know what? I actually wrote down, but I didn't write down the corresponding. I wrote down how many charts everyone had, but then I didn't write down the names next to the number. So I want to say you had, was it 30? Was it 32 or 40? I want to say you had One of those numbers.
No, I had like 60, maybe 70.
Oh,
I originally had like 100, Spencer.
Then you know what? You had
I only got through like half of them. So
you had 68 then, because you were right. You were right before Katie, right? Or after Katie? You were after Katie.
I was right after Katie.
So you had 68. That's what you had. 68 charts is a lot.
Spencer, I have a lot of charts. I don't know if you've heard, but
yeah,
I look at more charts than 99.9% of traders out there.
Well,
I see some positive feedback in the YouTube chat here, so appreciate you guys. Phil Blotsky says, "Don't get us canceled." You know, Phil, no promises, but I'll do my best. Spencer, you mentioned the retail conference this week.
Yeah,
that is not all that's happening this week. I'd like to give a shout out to the JP Morgan Biotech Conference, the biggest biotech conference of the year. So
it is a Super Bowl for biotech nerds.
Yes, I'm a big biotech nerd, so I'm very excited to see what comes out of that. It's happening. It starts today and it goes through the 15th in San Francisco. And there's always some very exciting news out of that. And I don't know if you've heard, but it's a very exciting time for the biotechnology industry. You know, we're seeing some of the largest acquisitions of all time. Like recently, AbbVie announced a $20 billion acquisition of Revolution Medicines. I don't think that's finalized, but you know, that's the kind of stuff we're seeing in biotech right now is $20 billion acquisitions. And, you know, a lot of people say it's because of AI, and there's that whole narrative out there about AI driving this biotech bull market. But I think that's bullshit, Spencer. I think it's primarily due to a massive patent cliff for these big pharma companies, you know, companies like Merck.
So all their patents are expiring and they need new toys.
Exactly. That's exactly right. Like, I think Eliquis, I don't know if you're familiar with the Eliquis, but when I worked at my parents' pharmacy, that was probably the number one brand name product that we were moving was Eliquis. And that is going to expire in 2027, I believe. And they're, I think the wholesale price for that is like $500 a bottle. So, you know, it's a great product. Yeah, it's an amazing drug. It's saved a lot of lives, but you know, it's gonna be $10 a bottle very soon whenever it goes generic. So, you know, across the board, that's happening at these big pharma companies, and they need to acquire biotech stocks. And that's why we're seeing this massive re-rating in real time. It's been going on since the April low. You know, the equally weighted biotech is up almost 100% since the April low. And I don't think it's close to over, Spencer. I'm going to be honest.
The IBB made new all-time highs on like Wednesday, last week, I think, right? So
the what?
The IBB. That was a new all-time high on Wednesday. Yeah. So, you know, and the XBI obviously, you know, nowhere near that, but has been on a much better run since April, as you mentioned. So, a lot going on there. Do you have any biotech charts to share with us? Or?
I did not bring any biotech charts. I wasn't planning on talking about that, but I wanted to talk about precious metals. You know,
Sam is a biotech nerd on the side. That's his side gig, is biotech nerd. His main gig is commodities nerd, right?
I'm also like a semi-pro Clash Royale player. I was tweeting about that over the weekend.
I didn't know that.
Man, love that game. There's nothing like, you know, grinding at my desk for 15 hours and then just unwinding and whooping some ass on some Clash Royale. I get a lot of joy out of that, Spencer. I got to be honest.
I'm glad. We all need something. We all need a hobby. Okay, can we bring up slides? Was that
Let's
17?
start with 17. I want to start with 17. This was an amazing tweet from Rick. I posted this chart over the weekend of the junior silver miners overlaid with the TSX Venture Composite. Which, for those of you that are not familiar, this TSX Venture Composite holds a lot of very, very speculative stocks. You know, like in the United States, we have venture capital, which, you know, they take a lot of the, you know, $1 million companies, and you know, in the public markets in the U.S., you won't find many $1 million companies, but you know, you'll find just real pieces of shit in the TSX Venture Composite like that. So it's very, very speculative, a lot of commodity exposure. And Rick said that in 1973, they announced that 20 to 30% of the stocks in this venture composite were involved in some sort of fraud. And I thought that was really fascinating. I didn't know that, but that doesn't surprise me. And we're in the kind of market environment right now where you want to be looking for the frauds, the very speculative, terrible companies, because those are what go up the most in bull markets. You don't want to be buying the blue chips. You don't want to be buying Philip Morris and their 5% dividend yield.
I thought you were just kind of making fun of smaller, ergo riskier companies, but no. If 30% are engaged in fraud, granted, the industry you're talking about is, hey, there's a hole in the ground. Maybe there's gold. Give us money, we'll find out. So
exactly, yeah. It's amazing how long they can do that too, Spencer. Like you'll find some companies out there that they've been talking about this same hole in the ground for 25 years and made absolutely zero progress. And it's just amazing how they can continue to do that. I don't know.
You know what, Sam? I have to admit, I've listened. I've listened to more investor presentations of the companies you're talking about than I would like to admit. More than you, probably. And yeah, that's basically all it is they just talk about a hole in the ground for 25 minutes and how promising it is and how they need your money. They need to fund the exploration, right? And you're doing the Lord's work. So, but that's pretty much all. That's what it comes down to. That's what all of them come down to is, hey, maybe there's gold or something else in there. And we think there is because of X, Y, and Z. We did a survey a year ago that told us, maybe there's gold down there. So maybe there's gold down there, right? And that's pretty much what all of them come down to.
And as a trader, I love those kinds of setups because, if the company does actually turn that corner and find some gold, it can go, as the great philosopher Drake said, 0 to 100 real quick. And that's what we've seen. Like today for the Gold Rush premium members, they're getting a trade that we've been in for like 9 months now, I believe.
Wow.
And we got in when this company was like $200 million in market capitalization, and now it's almost $1 billion. So
wow.
It's gone from 0 to 100 real quick. We're seeing that across the board. And last week in the Gold Rush note, I pointed out this key intermarket ratio chart, the junior silver miners relative to the big silver miners. It's one of my favorite risk appetite ratios in precious metals, and it's been turning sideways here for the past few months really, while silver has ripped to new all-time highs. And I have a really hard time believing that if precious metals are ripping across the board, you're not going to see a bid for the riskiest precious metal stocks. Yeah, I call bullshit, Mr. Market. And it tested that former resistance, flipped it into support, and absolutely screamed higher last week to new multi-year highs. And I think this is the beginning of a fresh leg higher for this key intermarket ratio. So,
all right.
Yeah, I'm continuing to look for really speculative mining stocks. And
this is a good chart. I haven't seen this chart for a few weeks, maybe longer.
Yeah, I tweeted this one out over the weekend and got a lot more engagement than I was anticipating. I said, kind of tongue in cheek, the precious metals bull market hasn't even started yet. And, obviously that's not really true. There's been some pretty extraordinary gains since March 4th of 2024 when this really started. But, when you look at this chart, Spencer, man, I have a hard time believing that we're anywhere close to finished with this bull market. I think there's further room to run, and I think gold and precious metals in general will continue to outperform their alternatives for the foreseeable future.
I mean, look, you guys are pounding the same drum that you were a year ago and 2 years ago. The difference is this time the price has gone vertical. right? So kudos to you. Look, Sam mentioned the trade that he's giving out to members today. If you want to get that trade and every other trade that goes out, you got to join the Gold Rush, allstarcharts.com/gold-rush. The link is on the screen. Get all of Sam and Jason Purse's research while you're at it. Sam, it is 9:42. You want to do one more chart and then we'll get out of here?
Yeah, let's do number 21.
Okay.
The 21 Savage.
This has nothing to do with metals.
This has nothing to do with metals. It has to do with earnings season beginning this week. So, did you plan to have that guest on today because of earnings season, Spencer, or was that just serendipity? Because that was really well done.
Yeah, I mean, I would typically talk to David around earnings at some point, either at the beginning or the end, right? Yeah.
So Bank of America is coming out this week. Spencer, if you drop the link to the weekly beat post.
Oh, I can drop the link to the weekly beat. I'm actually very excited because we're going to be talking a lot more about the beat report this earnings season than we have previously. And I'm very excited for that and for you guys who've been working on it for a very long time now. So tell us more about this chart. I will drop the link to the post in question.
Totally. And I should mention too, Spencer, that the quarterly beat is dropping today. This is something we've been working on for a very long time, making a proprietary data set that nobody else in the world has for fundamental and technical data. It's a fusion analysis data set, and all of you are in for a treat. This is a really amazing report. I think we have like 50 different fusion analysis charts covering last quarter's earnings season and the big takeaways from it. But looking ahead to this earnings season, we're starting out with the big banks. And that quarterly beat is free. It's completely free. And I think it would be irresponsible to you and your family to not read it, because it'll give you tremendous perspective on what just happened in the earnings season. And, I am a technical analyst at my heart and my core, but I've realized, Spencer, over the years that this fundamental data gives you some really nice insights into what's happening in the market. Technical analysis doesn't give you all the answers, but if you fuse it with fundamentals, that's about as good as you can get. So yeah. All right. Talking about Bank of America, that is reporting this Wednesday before the market opens, and it's testing this great financial crisis peak. And if you look at something like KBE, which is an equally weighted basket of, I can tell you how many stocks this has. Let's see. I think it's like 60 bank stocks. Wow, no, I'm not even close. 104 banks, the KBE. The KBE looks exactly like this. So I think that is one of the most important charts in the world, the KBE, and it's trying to break out to new all-time highs. And I think if that is the case, and if Bank of America is breaking out to new all-time highs, it's bull market on. Throw all your midterm seasonality charts out the window. We're going higher. So I think this is a very, very important earnings reaction to watch this week, because
but allow me to play devil's advocate, Sam. This is a perfectly logical place for the party to stop.
Totally. Yeah. I could see this gapping down 5% and getting slammed. And I would, that would concern me. But I could also see it gapping and going 5%, who knows, Spencer? I don't have a crystal ball, but we will know on Thursday how the market or what the market thought of this earnings report. So I think this is a very, very important one to watch. And I think financials are one of the, if not, I don't know, I could make the argument that financials are the most important sector in the world. I don't know if I would do that, but I think you can make that argument. So
you can make that argument and not sound crazy.
Exactly.
I think JC was saying this at Chart Summit. There's probably like 4 or 5 sectors you can make that argument for and not sound crazy. You would sound crazy if you're like utility is the most important market segment. That would be crazy. But there's probably 4 or 5 where you could say this is the most important, and you can make a reasonable case for it and not sound like an insane person. Guys, the beat report is the coolest thing because for a long time, and I was kind of talking about this with David earlier, for a long time I was in that group where I was a slave to the headline numbers. Oh, they beat. It must have been great. Oh, they missed. It must have been terrible. The stock must go up. It must go down. And that, of course, is so not true. And in my head, years ago, I came up with like a little formula for what is like the most important things to look for in terms of earnings reports and the stock reaction. But these guys basically went and just quantified it better and did it better. So yes, the earnings reports, the numbers themselves they're not totally meaningless. They do matter to an extent. But what matters more than that is the reaction to the number. And that's what the beat report talks about. And that's what they write about every single day during earnings season and weekly as well when they do summarize the broader trends. So get the beat report now. They're kicking it into high gear starting, I guess, tomorrow.
And it's completely free, Spencer. Like, why wouldn't you get this research?
Completely free. Maybe not forever, but free for now. Right. So, or maybe free forever. I don't know. So you want it, you got it. Get the beer. The link is on the screen. The link is in the chat. And Sam helped put that together, and they do great work. And honestly, if you have ever been in that position where you're looking at this, you're scratching your head. You're like, I don't get it. I just don't get it. Doesn't make sense. Doesn't have to make sense. Don't worry about it. Okay. But let the beer report tell you what's actually happening. Okay. And Sam and Strazza and all the guys at All Star Charts have been working on this for a very long time, and it's freaking awesome. Okay, so get the beat report. The link is on the screen. You guys do great work. We got to hop, Sam. It's getting late. Okay, we didn't even have time for recess today. That's okay. We'll do it tomorrow. But it is
no, Spencer. My recess. I'm going to the KU Baylor on Friday night, and then I'm going to the Miami Heat Oklahoma City Thunder game on Saturday. So I'm going on a little basketball.
How far are you from Oklahoma City?
I'm going to Miami a little bit early for portfolio.
Oh, you're going to Miami. Oh, yeah. Ooh, okay. Yeah, okay. All right.
I'm like 4 hours, maybe 3.5 hours from Oklahoma City though. So
that fits with my theory that every Midwestern city is a 3 to 5 hour drive from the nearest Midwestern city. It is true. From Pennsylvania to like Colorado, you can basically draw a line between major cities, and they're all 3 to 5 hours apart. I don't know why that is, but that's my theory of America, and you just confirmed it. So thank you very much. We got to hop. All right, it's Monday. We got the long and short of it with Kenny Glick at 11. If you have any requests for our ticker request show, it's not TRL, it's CRL. Chart Request Live, 1:00 today. Send in your requests. Let's put the email up on the screen. Whoever controls that. Oh, wait, that's me. Send us your requests for CRL. Email your requests, and they will answer your questions on the show 1:00 every single Monday. And that's what we got. So thank you, Sam, David, Kenny, everyone in chat. We'll see you guys tomorrow, okay? Have a good one. Go make some money. Enjoy your day.
Adios.
I can't take no loss. I don't even know what it costs.